dear students and working accountants. Welcome to my Smart Tally Prime YouTube channel. My name is Babura from Hyderabad. Before entering into our topic today, an advice to you. So if you want to learn Tally Prime, GST, TDS, TCS, everything perfectly and gaining expert knowledge and become expert accountants, please follow all my videos in the same serial order I uploaded and practice very well. Definitely you will get expert knowledge and you will become expert accountants. And everyone visiting my channel, please don't forget to subscribe to my channel. If you have not already done, only once you can subscribe. And click the bell icon and select all so that you will get notification for all the videos which I upload. And then share my channel as Smart Tally Friend with all your friends or anyone who want to learn all these topics, who want to learn all this tally, GST, TDS, TCS, everything. So share with them. And then while watching the videos, every video you watch till the end, don't skip in the middle, because if you skip in the middle, you will know and you will see only some theory part, and the later part, the actual practical work of the tally, right? You cannot understand, you will miss it. So please watch till the end, and at the end, if the video is good, please like my channel, and on the bottom in the comment section, please don't forget to post your comment about my video. Okay, and now we will enter into our topic, and I will share the screen. So here, yesterday, that is in the last video, we have taken the rules, relations, and provisions regarding the composition dealer, how you maintain that, all the settings, how to create that, and how to make the settings. So creating this is general, creating this same for any company. Okay, then you have to go to the F11 features in the GST details, that give the state, it's automatic, and registration type. Previously we select it will be by default, it will be regular. We have to select composition and then give the number and everything. And here we have to give the rate of tax depending on our business. If for traders and the manufacturers, it is 1%. For restaurants, it is 5%. And for service providers, it is 6%. Give that, and below that. So whether the tax is this tax rate given, it is to be calculated on only the taxable goods, the taxable supplies, or taxable exempt and nil rated, means the total turnover. But with traders, the tax is payable only on the taxable value. For others, we have to take the total value, total sales. So now we are taking as 1% as trader. So we will take taxable value, and here enable tax rate for taxable. I already told you, you can make it yes. It will be applicable for the RCM also. It is our next topic. Okay, and then even if it is, you keep it no, is okay, no problem. And e-waybill and all this, keep it no, and accept this again. Accept this window. Accept the window. Accept the window. Okay, it's over. And then we already know all the purchases. So for all the purchases, we have made the entry. See here how to create the Jabati ledger, the tax setting, and for stock item, creating everything in the previous video. We generated everything. Just you can see once again, and how to make the entries in the purchase bill for only purchase from regular dealer. When you are purchasing, you can purchase from the same state or the another state, that is intra-state or interstate. So only if you purchase from a regular dealer, whether in the state or outside state, there is a tax is levied, and we can enter the tax in our purchase voucher. And from URD, unregistered dealer, or composition dealer, unregistered dealer, whether intra-state or interstate, and composite dealer only in our state, because other state composite dealers, they cannot supply to us. So in unregistered dealers and composite dealers, there will be no tax, and for only regular dealers, there will be tax. So you have to enter the tax, show the tax also, but it will be added to the, since we have the setting, that is purchase value. So that amount will be added to the purchase value. That GST will not be shown in the GST account because we have taken it as created under indirect expenses and we have given the option add to the purchase value, appropriate to the purchase value. So like this, we have completed and the sales, we made that entries. So BAL, if you take purchase, purchase. So purchase exempt. So this is the one. So there will be, this is exempt, there will be no tax. And if you take taxable, so in the case of from registered persons, the tax will be there and tax will be shown here, but it is automatically, it is added to the purchase value. That is why in the purchase account, the tax amount is shown. This is also the purchase from registered, non-local, it is registered only. This is also local registered, those whether that goods, when the goods are taxable. If the goods are not taxable, whether purchase from even local or non-local registered persons also for the, what you call, not taxable, non-taxable, taxable supplies, only goods only, the tax will be there. For not taxable goods, that is nil-rated or exempt goods, there will be no tax, as well as unregistered dealers and composition dealers, if you purchase from them, there will be no tax. So this everything will completed. Now, and these purchases will not be shown in the GST report. This is called CMP 08. It deals with only just like GSTR 1. It deals only with outward supplies, with sales only, and also inward supplies means purchases liable under reverse charge. Reverse charge means we have to pay. So for sales, we have to pay the tax. That's our liability. For purchase, purchases also under reverse charge. So we are liable to pay. We have to pay. That is also our liability. That is why this CMP 08 deals with liability. So purchases only taxable goods only we have to pay tax. Other non-taxable goods we need not pay any tax. And the purchases, the sales and the purchases liable for under reverse charge also will be shown in this table. So now we will go to purchases completed. Now we will go to sales. What we do is how to record the sales. In this case of sales, where when you are selling the goods to anyone, you cannot collect tax. So there will be no tax in the sales vouchers, whether you sell it to the only local only, no non-local, only local, whether registered dealer or unregistered dealer or composition dealer, to whomever you sell in that local area only, whomever you sell, you will not levy any tax, you cannot levy the tax. But if you sell taxable goods, you have to pay 1% from your pocket. For non-taxable goods, that is unrelated and exempted goods, you need not pay any tax. That will be paid from our pocket, and that will be taken as expenses. That is why they will be shown in the tax ledgers, and they will be shown in the, they are not in the balance sheet under duties and taxes. We are not creating. We are creating under indirect expenses. It will be shown in the profit and loss account as expense. So how to make the entries and how that will be shown in the GST reports and how the tax is to be paid. That we are going to learn today. So here, now we will go to the purchases, sales voucher. So generally F8 is the sales voucher, F8, and then here we will take a 2nd June. We will take the date 2nd June. Purchase we showed on 1st June. So 2nd June I am taking the date. So to whomever you sold, you sell, so you cannot levy the tax. Okay, but you have to pay tax on taxable goods. That is why taxable goods and non-taxable goods will be shown separately. And whoever you supply, registered local supply, registered composition, unregistered, we are not bothered about the party. We are bothered about the goods only. Only for taxable goods we have to pay tax. That's why taxable goods, non-taxable, exempted goods, nil-rated goods, we will show separately. Okay, you take local registered, no problem. Local registered. So in this case, taxable means taxable sales means taxable goods. That taxable goods sales, and here goods also taxable. Taxable sales means taxable goods. We take it 1 unit, 20,000. Here 20,000. Okay, there is another item that will be taken there. Otherwise, we will come here. And now you cannot levy any tax. Even if you try to levy the tax, take GST, so tax will not be calculated. So for local sales, and it's taxable sales means taxable goods. So we are entering this one. For this, we have to pay 1% in tax only. For others will not show. Now we will take up again the same registered dealer also. Even though he is a registered dealer, now you are taking exempt goods. So exempt sales means goods also exempt. If you take exempt goods, for example, 15,000 rupees, for this also, there is no tax at all. There is no tax at all. No tax cannot be calculated. Okay. And then we will take up another one. Again, composition dealer. We are not bothered about the dealers. So composition dealer. And when I am selling now, for composition dealer also, suppose you are selling taxable goods. That is taxable sales, taxable goods. One item, 25,000 for example. So no tax will be calculated. No tax can be calculated. No tax. Okay. So tax cannot be calculated if you sell to anybody, but the goods we have to classify and show differently, so that on taxable goods you have to pay tax. Okay. Now I am taking, this time I am taking unregistered dealer. It's okay, no problem. Unregistered dealer are taking, and goods are taking nil rated this time. Nil rated, and also sales nil rated means goods also nil rated. One item. So 15,000 for example, you take it. 15,000. So nil rated, there will be no tax at all. So there is no tax. And again, for now, we will take up for unregistered dealer itself. Unregistered dealer, we take up taxable goods. Sales taxable means goods also taxable. We take one item, 20,000 rupees, 20,000 rupees. Okay. So there is no tax at all. Okay. Like this, we have to pay. So to whomever you sell, so we are not bothered about the person. We cannot calculate the tax. But sales, for any tax, any good sales taxable or anything, we don't charge the tax, cannot collect the tax. But taxable sales, that is taxable goods, and non-taxable means nil rated and exempted, they will be shown separately, because taxable sales, taxable goods, exempted. Nil rated sales means nil rated goods, that shows separately because we have to pay tax on taxable goods only. That's it. So like this, we have made the entries for sales. So I have made the sales. And now you will see, go to the ledger, display more reports, then display more reports D, then account books, ledger, go to sales. See, sales exempt. There is one item, exempt item. No tax at all. There will be no tax. One item. Then go to nil rated. There is one item. For nil rated also, there is one item. Go to taxable. For taxable, there are three items. For taxable, there are three items. Okay. So like this, we are giving. And for anything, for any goods, don't have tax at all. You don't have tax, exempted, nil rated, as well as taxable also, we don't have any tax. But for the taxable goods, we have to pay the tax. And how these sales will be shown in the purchases, they are not shown in the GST, CMP 08. Only sales are shown. How these sales are shown in the CMP 08. Now you see, you go to display more reports G, and then GST reports O. See, GST reports O. You got it. So here CMP 08. So CMP 08 if you go. So I will take okay. We have done this GMP 08 is filed. It is only a statement. It's not a return. That's why simply it's called GST CMP composition statement 08. So this will be filed only once in a quarter. So for every quarter, one statement is filed, and that is to be filed after completing the quarter, the next month before 18th. That is 18th of next month after completing the quarter. So April, May, June. This is April, May, June means July 18th. We have to file this statement GMP 08, and also we have to make the payment. You see here. In this case, outward supplies are shown. That is sales. Taxable sales, 1%, we have to pay tax. So the tax is shown, the turnover sales, taxable amount is shown. See, exempted sales and nil-rated sales, only the turnover amount is shown. Taxable sales, taxable amount That is taxable amount is taxable value. It is shown, but there is no tax. But for only taxable goods, there is the value of the goods and tax. So for 65,000. So in this, if you press this, all the details will be available. If you press this, the details will be available. Press this, details will be available. And the tax is 1%, that is 65,000. 1% means 650. So 650 is the tax. So half and half divided between central tax and state salary. 0.5% in central tax, 0.5% sales tax, state tax, 325. Total is 650. It is to be paid on 18th of the next month after completing the quarter. And by the statement is to be filed and the payment is to be made. Okay, this is how this one. And in this case, and if you go to this one here, it is showing all the three. But in this, if you go to, and when you file this GST CMP 04 is an annual return. It's not quarterly. Quarterly only one statement. This annual return only once in a year. Once in a year means after completing the year, that is 31st March, April to March. After completing the year, in the next month, end of the month, that is after completing March, so April 18th for the March quarter, 18th is the date, last date for filing the CMP 08. And month end, April 30 is the last date for filing the CMP 04 annual return. In the CMP 04, all the four CMP 08s we filed, the total amount will automatically go to the GSTR. This is called, it is a return. It is called not CMP, it is called GSTR 4. So GSTR 4, these details we filed in CMP 08 for 4 quarters, that will automatically go to that one, that is called auto population. It will be auto populated, the data will be auto populated, that cannot be changed at all. It is auto populated. And this is our sales. And all purchases we have to make manual entries. So purchases we have to make manually, but we have to divide them. Purchases from registered dealers, purchases from unregistered dealers. That is why we make the entries registered, unregistered like that. Purchases from registered dealers, purchases from unregistered dealers, and purchases under reverse charge, and all these will be shown in that one manually. But the CMP 08 sales will be auto populated. Okay. So here, see in this GST 04, see taxable 0% nil rated is shown, taxable 1% is shown. Only these two are shown. Actually, in this one, we made 5 entries. We made 5, 3 in this and 1 plus 1. 5 entries we made for the sales. But in the CMP 04, only 4 are shown. No direct implication on return tables 1. Because in the tables, this one is not applicable. Only 4 are shown. See this, nil rated 0% is nil rated are shown, taxable are shown, but exempted are not shown because nil rated means at present the rate is 0, no rate. So by issuing a notification, the government can change it from nil rated to some other rate they can transfer. So from nil rated, they can make 5%. They can make 5% tax. That's why this can be, nil rated can be changed by the government simply by issuing a notification. But in the case of exempted goods, these exempted goods are not taxable at any time. The government cannot levy the tax by issuing a notification. The list of all the exempted goods are given. From that list, they have to transfer to taxable. This is called taxable. So in this we see here in the GST 4, this is also called taxable. These are called taxable. Taxable 0%, nil rated. This is taxable 1%. But here it is shown as exempted sales. So this exempted sales, there is a separate list in the Act. Sales exempted. So they have to be transferred to the taxable table. So in the taxability, they can levy the tax. These exempted sales cannot be transferred by notification. They cannot levy. So if they want to make it taxable, they have to amend the Act in the Parliament. That is why These exempt sales are always exempted. Nil-rated sales can be made taxable, and there's some rate can be levied on the nil-rated sales. That is, nil-rated goods can be transferred to 5% or any rate. That is taxable rate. So that can be done. That is why these exempted sales are not shown in GSTR 4. Only taxable, but 0%. This is taxable 1%. We have to pay 1%. Not the 1% is not the GST Act rate. Our liability is 1% like this. Okay. And then in this will show as well as the liability. This is the sales and purchases that will be shown separately. Okay. In the CMP 08, here below this, outward supplies, below this, inward supplies also will be shown because this is the liability to pay. And in the case of input sales also, inward sales, reverse charging mechanism we have to pay is our liability. That is why. And the inward sales also will be shown here. Inward supplies, liable to reverse charge, the value, taxable value, tax they will show. That is also to be paid by us because even though it is inward supply purchase, we have to pay tax. That is why that also will be shown in GNP 08. So next topic is our topic is RCM. Then we will learn everything. Okay. So this is about this one. Okay. So now it is showing like this. And we have to pay this tax to the government. In this case, we need not pay anything. But in this case of this one, and this will be shown in the profit and loss account. You see, in the profit and loss account, so Alt F5 or Alt F1 is the key for the detailed format. So here you see sales, exempt, nil-rated, taxable are all shown separately here in the balance sheet. Okay. And the GST, CGST paid on purchases is not shown separately. It is actually directly added to the purchases, taxable purchases. It is added. But when you pay the tax from our pocket, that will be shown separately in CGST and GST ledger. And they will be shown in the profit and loss account as indirect expenses. Okay. Now we will see how to pay. So we have to pay GST reports. So this for this one, we have to pay 650 rupees total. So central tax 325. This one sales tax 325. So how we will make the record that payment? Go to voucher and the actually 18th of July. This is June 30th over. 18th of July is the date for filing this return and make the payment. July 18th we cannot take. We cannot our education version cannot be the date cannot be taken. So we will take up 2nd July. So for May, June we are making a payment on 2nd July. 2nd July you have to make the payment. Generally you have to take the voucher is payment voucher. That is F5. S5 is the payment voucher. Simply CGST. That is the amount. 650 means 325. So 325 CGST. It will come to credit again. We make it debit. Debit HGST 325 to generally you can pay cash small amount, but in the case of taxes and all these things you have to pay through bank only. So through bank, through State Bank of India 650. Like this you can make entry. But this is the liability paid to the government. That is called, this liability is paid. The liability is called statutory liability. The liability arises on account of the act. That is called the liability is statutory liability. So we are making the payment of statutory liability. So entry will be the same. Payment voucher is the same. But we are making the payment under legal obligation. That is as a statutory payment. So for that we have to use another option, but voucher will be the same. We have to do another action. We have to show that we are paying this amount under statutory obligation towards composition factor. We will pay for composition also. We will pay for reverse charge also. We have to pay, but that is different and this is different. That is the composition pay is on sales, and the RCM is under the RCM method. That is for under purchases. On purchases we pay under RCM. That is why both must be the payments being made separately, and we have to show we are paying. For that, what we have to do is go to the same payment voucher, but you go here, Control F, auto fill. So click that or click Control F on the keyboard. So it will show this is autofill. Here it will show the details. What is the payment? Stat payment. Stat payment means statutory payments, paying under statutory obligation. This is statutory payment. And what is the type of payment? You are paying GST. GST, why are you paying? Payment type. Why are you paying? Towards composition tax. That is sales and non-taxable sales. That is called composition tax. Or purchases, on the purchases, under reverse charging mechanism, RCM, are you paying? No. So that's what you have to indicate. So we are paying under composition scheme. So date is 1st April to 30 June. It will not take, so I take 1st July. Up to that period, I am making the payment. That's all. So it will show here statutory payment for GST. Type of payment is composition. So in this case, and if you make the payment for differently, separately you have to pay stat payment, GST, and here in the case of reverse charging mechanism means the recipient has to pay. So that's why it's called recipient. Reverse charging mechanism payment liability is called recipient liability. In that case, but you make separately. First one, composition payment, and second one, another voucher. Again, recipient liability and the time. So that two separate payments you have to make. Now we are making only composition, and 1st July I am taking. And here, but entry will be the same. CGST 325, then debit, SGST, SGST 325, and to State Bank of India 650. Okay, it is. So this is to be shown here. This is why we use autofill. Entry will be the same. And come here. Here we'll pay, for example, e-fund stands for, we take it as NEFT you are paying, for example. So NEFT or RTS and everything is there. And here, details of the payment you have to give here. Provide GST details, go to yes, take yes, and here, mode of payment, how you are paying, NEFT, RTGS, or check, you will take that. What is the bank name? SBI, name of the bank, SBI, and there will be numbers. All these numbers will be entered there, and then bank number and all this there. Payment date, 2nd July, we are making the payment. So like this, we have to make the payment. So with this, payment is completed, but in the return, display more reports and the GST reports. In the returns, the liability is there. It will be shown as it is the return. We have to file to the government. But in this case, go to the ledger, BAL, ledger, go to CGST, for example. So in the CGST, we made payment of CGST. So it will be shown in CGST and GST also it will be shown. So in both the cases, I mean in the tax accounts, the amount is shown because we paid it, but it will be not be shown. Generally, it is not shown in the balance sheet. In the balance sheet, the taxes and the current liabilities, no taxes are shown. Okay, but what we are go to profit and loss account. In the profit and loss account, so this is shown. This is a condensed form. If you want this one, you see here, F5 is there. You see here. Click the icon, arrow. You show F5 detailed, Alt F5. Alt F5 means detailed. So you can click Alt F5, you can click. The same work will be done by Alt F1 also. So this is for details. If you close the details, again after F1 only, Alt F1 or F5, you have to click. If you click Escape, you will go. Okay, here CGST and HGST will be paid. It is expenditure for us, for the business. So CGST and SGST, they are shown in the profit and loss account. If it is under duties and taxes, the amount will be shown in the balance sheet. It is under indirect expenses, it is showing in the profit and loss account. This is how we have to make the entries for sales and how the reports are shown, how the GST reports are shown, and how to make the payment. So this is our topic for today. That is the second part of the composition scheme. First part is for purchases, and second part is for sales and GST reports and payment of tax. This is the second part. With this, our composition scheme topic is completed. The next topic, we will go for reverse charging mechanism. So I hope you all follow these videos, practice the videos very well, and get expert knowledge and become expert accountants, I hope. and wish you all the best. Thank you. So we will meet in the next video. Bye.